It's not sharing this very well. Give me a second here. Let's see. All right, that looks pretty good. So as you can see on the screen, and again, you can pull up the blog post and kind of read along while I talk if you want. So this first screenshot shows a LEO page on this LeoStrategy analytics app. So it's got the LEO price, which is 11 cents right now. It's got the total supply of LEO, which is 30 million. It's actually a little bit less than 30 million because of the burns. I'm kind of assuming that once this is live, it'll actually be tracking, the current supply of LEO, which is trackable through Arbitrum, where you can actually see, if there's been burns, which are obviously happening every day, then you can see the current supply of LEO. And then you've got the LEO holdings of LeoStrategy, which is 2.165 million. And then the LEO net asset value, or NAV, is $238,150. So you get that by literally just multiplying the LEO holdings times 11 cents to get that NAV. The LEO yield, and it's saying week to date, is 3.75%. If you annualize 3.75%, that's 195% per year. And by the way, LEO yield, and they're going, if you look at this website and compare it to MicroStrategy's website, you can see that LeoStrategy is not trying to reinvent the wheel. They have taken, this very simplistic approach that MicroStrategy has done, and now they're applying it to LEO. So LEO yield is the same thing that MicroStrategy calls BTC yield, which is essentially how much LEO per share are you adding to the LeoStrategy balance sheet. So over the past week, essentially they added, and it says it here, I believe, 78,241.18 LEO was added to the LeoStrategy balance sheet without adding any more LSTR shares, which means that the LPS was raised by 3.75% in the past week. So then you annualize that by multiplying by 52, and then you get 195% annualized LEO yield. So that's how you get the yield, is essentially just the growth of LEO per share of the fund. And since LSTR shares are backed by the LEO held by LeoStrategy, that's how you get the value of the fund, or the net asset value. So the LEO gain, like I said, was 78,000 over the past week. The dollar gain, so basically just taking the dollar value of that LEO, was $8,600 over the past week. And the LEO gain annualized would be $447,540 per year added to the fund, which is pretty crazy. If you take the current market cap of LSTR plus the current net asset value, it's actually, I think, a little bit less than 447,000, or maybe right about that. So essentially the whole ecosystem that LSTR has right now, which is the LSTR token and the LEO it's holding, is doubling every year at the current pace. The LEO gain annualized would be 4 million. So that's how much LEO is expected to be added if it continues growing at this pace, if LeoStrategy continues growing at this pace. So 52 weeks from now, you would expect that another 4 million LEO would be acquired by LeoStrategy if the past week is projected out into the future. So I think that gets kind of interesting if they accelerate, the accumulation of LEO, which I know is their plan. The LEO volume, so I guess this is now going to get into the LEO trading volume, for all the different LEO pairs that are out there. And that's important for a lot of reasons, but one of the main reasons it's important is the LeoStrategy market maker. In my opinion, and I think in the opinion of a lot of others, the LeoStrategy market maker is going to be the most profitable part of LeoStrategy. So what it's essentially doing is really simple. It's market making all the different pairs for LEO, for LSTR, and for Surge. So there's 16 LEO and LSTR pairs currently live on Hive Engine only. And then there's, all the different LEO pairs on cross-chain, which is like BLEO, all the ones shown here, BLEO, PLEO, HELEO, and then you've got native LEO, which is Arbitrum. So native LEO on Arbitrum did $120,000 in the last month in trading volume. HELEO on all the different pairs that I mentioned that are just on Hive Engine only did $643,000 in trading volume over the past month, which is pretty crazy. BLEO did $3,600. PLEO did $7,400. And that, if you combine all of them, gives you $774,800 in combined LEO trading volume across all the different LEO pairs that are out there. That doesn't include LSTR. And then obviously when Surge sells out, Surge can be added to the mix. So that is just LEO trading pair volume, which is absolutely insane to see. I think it's pretty awesome to see that growth in terms of the LEO trading volume. And like I said, what you essentially, and MicroStrategy does this too, what you essentially call market making is, another word for it is volatility harvesting. So the more volatility there is, the more potential trading volume there is, which means there's more potential arbitrage volume. So if LeoStrategy has a moat on arbitrage, which it will on all the cross-chain pairs, and I'll get into that later, if it has a moat on that, then you could assume that some material percentage of the total trading volume out there, not this 775,000, but also the LSTR and surge pairs, a material percentage of that volume is going to be arbitraged by LeoStrategy. And each time it arbitrages, it makes a small profit. So as long as the arbitrage bots are built correctly, essentially arbitrage bots don't lose money. It's more just, how much do you make is really the question. Assuming that some material percentage is getting arbitraged by LeoStrategy, that is pure revenue for LeoStrategy. And that revenue gets used to buy more Leo and add it to their balance sheet. What gets really fascinating there is any revenue generated by LeoStrategy, whether it's market making revenue or revenue from LSTR.voter, or Leo collateralized loans or whatever they end up building in the future, any of that revenue that is used to purchase Leo is adding Leo per share to LeoStrategy at a $0 cost of acquisition, because essentially it's some sort of automated service that is providing value and earning revenue and using that revenue to buy Leo, which means that LeoStrategy is adding Leo per share without any dilution to LSTR holders and without any cost of acquisition on that Leo. So it is technically infinitely accretive is what they call it, which is another way of saying, when you buy something with a $0 cost of acquisition, any future upside is infinite upside because you had no cost. So I think that's where things get really interesting for LeoStrategy. In terms of its makeup in the strategy company ecosystem, it's a lot different than things like MicroStrategy, where, when you've got these massive companies that are public companies, they've got employees, they've got all sorts of costs of being a public company, et cetera. So there's a lot of overhead. So the ability to generate a profit and then use that profit to buy more Bitcoin in their case, or Leo in LeoStrategy's case, LeoStrategy has a very unique competitive advantage versus those other companies, which is pretty much zero overhead, right? The overhead is whatever it costs to build and maintain these apps, which, the way these are being built, if you've been paying attention, things like LSTR.voter, things like the market maker, things like surge.yield, things like this website, they're very simple, they're very low maintenance, and that is clearly being considered in the build process of these. Is like, how do you build very low maintenance, automated, heavily automated, essentially agentic AI driven applications that generate revenue. And whether it generates $100 a month or $1 million a month, any dollar that is generated is infinitely accretive to LSTR holders, because they use, whatever dollars are generated, they use to buy more Leo and add it to the balance sheet permanently. So things get really interesting as LeoStrategy just essentially continues to build out applications and revenue generating, products. I think the market maker is going to be the biggest one. I think it's pretty obvious. I mean, you see 775,000 in monthly Leo trading volume. Now you add in LSTR, which I think is already doing about 150K. And then you add in Surge once the pre-sale is over, and now you've got these three tokens with essentially cross-chain pairs and Hive Engine pairs that are all generating monthly trading volume. And LeoStrategy can have a moat for arbitraging these. So that is another competitive advantage. And I mentioned that I would get into it for LeoStrategy, which is LeoStrategy has a moat for any of the cross-chain pairs. So for the Hive Engine pairs, they don't have a moat because technically anybody can compete, right? There's no fees or anything like that on Hive Engine. So that makes it a lot more competitive. Basically, LeoStrategy needs to be the fastest and best market maker on Hive Engine if it wants to make a profit there. And I know that is essentially what they're building right now. It's already live. I've been kind of tracking it in terms of on-chain. But when it comes to cross-chain pairs, this is where I think things get really fascinating, because with BLEO, PLEO, HELEO, Leo on Arbitrum, and then LSTR on base, Surge on base, and then obviously all the Hive Engine crossover pairs, LeoStrategy actually has a moat on that because it's going to have a whitelisted fee that is lower than the market fee. I've been using this example, but imagine that the fee to bridge is 1.5% on all the Leo pairs, on all the Surge pairs, on all the LSTR pairs. So the fee is 1.5% for everybody, but LeoStrategy's market maker has a whitelisted fee of, say, 1%. That means that LeoStrategy can market make anything between 1 and 1.5% profit, and it can do it with no competition. because any other arbitrage bots that are trying to arbitrage those pairs can't do so profitably until it surpasses 1.5%. So that essentially gives LeoStrategy this window of 1% to 1.5% to play with. So for example, let's say that, you know, the B-Leo pair is trading at a 1.4% discount to the HE-Leo pair. LeoStrategy's arbitrage bot can buy Leo, B-Leo on BSC, and then it can unwrap it, or rewrap it back to Hive Engine Leo, and then it can sell that Hive Engine Leo on Hive Engine at a 1.4% premium to what it bought it for. So the bridge charged LeoStrategy 1%, so LeoStrategy keeps the 0.4% profit. However, the reason why no other bot could have competed there is because the bridge fee for anybody other than the LeoStrategy market maker is 1.5%. So if that is the case, then essentially LeoStrategy just did this arbitrage with no competition. 0.4% was profit for LeoStrategy and 1% was burned, because that's how the Leo bridges work. The 1% from the bridge fee is burned. So now the Leo economy profited in terms of burning Leo, and LeoStrategy's fund profited in terms of the 0.4%. So again, this is just an example, hypothetically, but if you imagine this in production, and this total volume number grows over time, that is just all pure arbitrage volume and potentially pure profit for LeoStrategy to add more Leo to its balance sheet, which then allows it to expand the offerings, of LeoStrategy's fund, which then leads to more volume because, LSTR grows, Surge grows, potentially other products in the future emerge and grow. So as the balance sheet expands through profits, it then leads to more volume, which then leads to more profits, which then leads to more balance sheet expansion, which then leads to more volume. You can kind of see how the flywheel turns on that. So Michael Saylor has famously said that volatility is vitality. So, he's essentially talking about very much what I just described here, which is if the Leo volume is $0 a month, if the Surge volume is $0 a month, if the LSTR volume is $0 a month, well, that's not very much vitality. There's no potential profit there for LeoStrategy. However, if the volume is 775,000 like it was last month, if that continues to grow, well, that increases the vitality of the market making profits for LeoStrategy, which then leads to profits getting reinvested in more Leo, which expands the balance sheet, which then leads to more volume because the whole economy is scaling upwards over time. LeoStrategy's stated mission is to try to get the total trading volume of Leo and all Leo-based derivatives, which are essentially anything created by LeoStrategy. So Leo, LSTR, Surge, and all the pairs that come with that. I think once LSTR and Surge are launched as cross-chain pairs on Base, I think we'll have something around 25-ish pairs in terms of Leo and any Leo derivative pairs that LeoStrategy can market make. So it's 25 different pairs. They're all moving, at different prices at different times. When someone trades into one of the pairs, it offsets all the other pairs and creates arbitrage loops. So essentially, if you can imagine, their stated goal is that all those, say, 25 pairs have $1 million a day in trading volume. That's $1 million a day in trading volume that can potentially have some material percentage harvested for arbitrage profits by LeoStrategy. Use those arbitrage profits to buy more Leo, which increases the balance sheet in terms of USD value, which then can lead to more potential volume in the future. If they're successful with this flywheel and getting to $1 million a day in trading volume, not just on the Leo pairs, but on LSTR and Surge pairs, things get really interesting. So, obviously the thing to watch will be the total trading volume, and then how much LeoStrategy is able to arbitrage that total trading volume. So that's kind of what I'm going to focus on when it comes to, evaluating LeoStrategy's success in terms of the market maker. Then they've obviously got all the other products that they're building out, which is pretty awesome to see. So scrolling through this post a little bit more, let's pull up, they've got the LSTR section of the website here. So on this, I can see the LSTR price, $2.13, which is up 136.2% since the pre-sale of LSTR, which was priced at 90 cents. And the pre-sale ended on August 4th, which is actually exactly 30 days before this video is being recorded. So basically the 30-day performance of LeoStrategy is LSTR tokens is 136.2%. The current LPS, or Leo per share, is 21.643. I can actually see that this plus 0. Oh no, I think that's actually accurate. So it was increased by 0.782 Leo per share of LSTR since the week prior. which is actually how you get that in the previous page. That's how you get that LEO yield, is you take this divided by the previous LPS, and then you get the 3.75%, I think it was, weekly yield, and annualized that was like 198% or so. So LPS and USD, you essentially just get that by taking the LEO per share, which is 21.643, multiply it by the LEO price, you get 2.38, which means that if you compare that to the current LSTR price, it means that the MNAV is actually lower than 1, which means that LeoStrategy is trading at a discount. So it's an 11% discount to the net asset value. So what that, in layman's terms, what that means is the fund is holding $2.38 worth of LEO per share of LSTR. So if the LSTR price is trading less than 2.38, that means that the net assets on the balance sheet are worth more than each share of LSTR. So that's how you get the discount. And if it was trading, for example, let's say the LSTR price was $2.50, well, it means that it's trading for 12 cents per share more than the net asset value, aka a NAV premium. Most treasury companies trade at a, big strategy, or treasury companies, whatever you want to call them, trade at a premium to NAV. So I'm just pulling up bitcointreasuries.org. Let's see here, bitcointreasuries.net and strategy. Oh, I gotta log in. Hold on. Forgot that they do this thing where you gotta log in order to see the NAV. All right, I'm logged in. So the MSTR MNAV is 1.326 versus the LeoStrategy MNAV, which is 0.89. So that means that MicroStrategy is trading at a 32.6% premium relative to the net asset value. And meanwhile, LeoStrategy is actually trading at a 11% discount to the net asset value. So one thing that I think is really interesting here is, as people learn more about LeoStrategy and how to value a strategy company, and by people, I really mean our community and whoever looks at LeoStrategy, you need to look at it similar to these other strategy companies, which, for example, with MicroStrategy, its value is not only, so the base value is essentially the net asset value on the balance sheet. So that gives you, essentially in terms of LeoStrategy, that gives you $238,000. So now you have to add in the velocity of accumulation. So you have to essentially speculate on the future growth of LeoStrategy. So that's what people are doing with MicroStrategy. That's why you have a premium. So the premium exists because people look at MicroStrategy and they say, well, you've got how much? 636,000 Bitcoin on your balance sheet, which is worth about $70 billion. So MicroStrategy stock should trade for at least $70 billion. Then they have to layer in, well, we think you're going to accumulate, for example, 30% more Bitcoin over the next 12 months. Well, now we need to value MicroStrategy at, not only the one-to-one value of the Bitcoin you're holding, but also the potential for you to add 30% more Bitcoin to your balance sheet over the next 12 months. So that's how you end up with an MNAV, for example, of 1.327 for MicroStrategy. So if you use that same way of valuing a strategy company and apply it to LeoStrategy, well, now you have to value, for example, using these numbers, you have to value LSTR at 2.38, which is the current NAV value. But then you also have to layer in the growth, the potential velocity of accumulation of new LEO onto that. So you end up with an LSTR price of 2.38 plus whatever you expect it to add to LPS. So right now, and if you go back to that previous slide, which I will do really quickly, if you look at the LEO yield, which is 3.75% a week, well, now you should probably value LSTR based not only on the current net asset value, which would be 2.38, but you should also add in the fact that it's growing by 3.75% or more per week. So then if you add in that speculation on future LPS, well, then that's how you get the MNAV premium. The higher the MNAV premium, the more potential there is for LeoStrategy to accumulate more LEO. So it becomes a kind of self-fulfilling prophecy, which is exactly how MicroStrategy has done it. Essentially going from, I think their first Bitcoin buys were like a couple $100 million worth of Bitcoin. And then they utilized that to spin the flywheel. And that's how they now have $70 billion worth of Bitcoin, which is pretty insane when you really think about it. But the more I've kind of gotten interested in LeoStrategy as obviously they've been succeeding, I got more and more interested in following what they're doing. Then I started looking more at MicroStrategy, because to understand LeoStrategy, is to really understand MicroStrategy. and what they're doing with Bitcoin, and then just applying LeoStrategy to Leo, the more that I kind of understood that the more the flywheel spins, the more that it can spin. So long as there is volume, there's profit, there's volatility, and that's where Michael Saylor got famous for saying, volatility is vitality. As long as that volatility is growing and the volumes are growing, that allows LeoStrategy, similar to MicroStrategy, to just go out and acquire more Leo. And the more Leo it acquires, the more volatility, the more volume that it can create. So I'm fascinated to just keep diving into this ecosystem of products, I think, that are kind of on the horizon in terms of what they're talking about. So that covers LSTR. Let's quickly talk about the Surge page that they shared here before we call it quits. It's already been 24 minutes, which is crazy. So the Surge page shows you all the stats about Surge, which is a obvious moment. So the Surge price right now is about 79 cents. Surge has a stated yield of 15%, and it has an effective yield right now of 19%. So the way you get this is the stated yield is 15. So there's 15 cents per one Surge token is paid out every single week. So that's the annual dividend is 15%. The weekly payouts are obviously 15% divided by 52. To get the effective yield, you take the 15 cents per Surge share and divide it by the current price. So if you buy one Surge at 79 cents and you're getting paid 15 cents per Surge, the effective yield on that is actually 19% because you're earning the same 15 cents per share, but you're buying it at cheaper than $1. So that's how you get effective yield. The circulating supply is 500,000 Surge. In the pre-sale, I can just pull that up really quick. Let's see here. Trade Surge. A lot of Surge keeps getting sold out. I swear, every time I refresh this, it's more. 382,125 Surge is left. So already, less than 75% of all Surge in the pre-sale is left, essentially. There's 208 unique token holders for Surge. The market cap of Surge, which you get by multiplying the Surge price by the circulating supply, is $394,500. The next distribution, for the Surge payouts is September 7th. Those obviously get paid every Monday at 0 o'clock UTC. They get paid 52 times a year, which is every week. The LSTR distributed and HBD distributed. So if you hold Surge, you get paid out every week. The normal payout is HBD, but you can opt in to get LSTR instead of HBD. And essentially what LeoStrategy does is they convert the HBD they would pay to you into LSTR, and then they send you the LSTR. So it's a way for you to automatically, essentially accumulate more LSTR if you want to, get paid in a more speculative dividend as opposed to HBD, which is a stable coin. And then the dividend reserves, that shows how much essentially HBD is sitting in the LeoStrategy account and for future payouts. So essentially they've said that they're going to keep some large amount of reserves so that, payouts never get missed and people can rely on them and know that they essentially just know that their payout's not going to get missed. So I think that's super smart. And I like the way, just overall, I think that was pretty much it. And then the last thing they've got here is the Surge presale. Surge is the most traded token on Hive Engine today by a factor of more than 3x over DEC, which are trading about neck and neck. What I really like about the LeoStrategy website is that it's just super simple, right? It's just really easy to understand. Obviously they modeled it after MicroStrategy, which I think is really smart as well, because what they're going to do now, they've said that they're going to launch on Base. So they're going to launch a bridge, and that bridge will connect LSTR and Surge to the Base blockchain. And then now they're going to try to tap into an external capital market outside of the Hive blockchain and see if they can onboard new capital to the Leo ecosystem through Base. What I think is really smart about this approach is this website looks exactly like MicroStrategy's website. All the stats are real time and easy to understand, especially for people who understand MicroStrategy. So it allows people to very easily onboard into the LeoStrategy ecosystem, which means the Leo ecosystem, with a kind of immediate understanding that LeoStrategy operates exactly like MicroStrategy, but they do it for the Leo token. So essentially, if people want to go out there and speculate that LeoStrategy is going to succeed in the long run by, and success is measured by their KPI, which is, seeing the Leo per share increase over time. If you want to speculate on LeoStrategy's success, well, it's easy to do. If you understand MicroStrategy, just say, okay, well, if these guys are doing the same thing MicroStrategy's doing for this token called Leo, and if they're going to succeed at it in the long run, well, you can speculate on that. And, MicroStrategy did something like 100x or more in terms of price. So if you think that this can succeed, then you buy into the model, and then you can easily be onboarded through the Base blockchain. What I think is really smart about choosing Base over other potential blockchains that they could have chosen, obviously Base is like the Coinbase blockchain essentially, but what's really smart about that is there's a fiat on-ramp, off-ramp directly on Base. So essentially, if someone, let's say like an institutional investor is out there and they've got fiat, they can literally go directly into LSTR and Surge through the Base blockchain using USDC. Fascinating setup. I think they're doing a really good job in terms of execution. What I've seen here, which I think is really also smart, is creating arb triangles. So by having a Surge LEO pair, a Surge USDC pair, and a Surge ETH pair, there's something really interesting that can happen here, which is, Ethereum has volatility, LEO has volatility, USDC has no volatility. And then also there's going to be a Surge Hive pair just by nature of Surge being on Hive. So you essentially have these 4 different pairs they all have different volatility makeups. So as the volatility essentially comes into each of those base pairs, the Surge token trades at different prices on each of those pools. And it creates an arb triangle, which essentially LeoStrategy's market maker can then go out and arbitrage the different volatility that's out there. So as long as you expect there to be volatility for crypto, not even for Surge, but just for crypto, then you can expect that the LeoStrategy market maker is going to harvest that volatility and turn it into arbitrage profits, and then use those profits to buy more Leo and increase their balance sheet. So this is a bet that there's going to be crypto volatility in the future, which I think if you've been in crypto for any measure of time, you would take that bet all day long. It's also a bet that there's going to be volatility in Surge and in LSTR and in LEO, because all 3 of those have volatility as well. Anytime someone enters or exits any of those tokens, there's volatility somewhere in the landscape. Someone sold or someone bought, and it changes the price of LEO. Well, now the price of LEO changes in all the different pools that's out there. Same for Surge, same for LSTR. So you're betting both on the volatility of these tokens. You're also betting on the volatility of crypto at large. And then LeoStrategy is taking all that volatility, harvesting it, turning it into profits, growing the balance sheet, and then turning it into more trading volume in the future. So I think it's a genius strategy. I'm honestly surprised nobody came up with it earlier. LSTR tokens are performing ridiculously well because I think people are starting to wrap their heads around what's happening here. Leo's trading at about 11 cents, which is 5x from the bottom. So things are going very well for the entire Leo ecosystem here. LeoDex is doing well. Obviously, that's not the topic of today's video, but that's where my focus is in terms of development. And then I just love seeing that there's another team out there that's doing awesome things, and they are grinding away. I mean, between all the different products that have already been released, the market maker that I've been seeing on chain, and then now this website, and Surge, and then the migration to Base. I mean, they're doing a lot. So it's awesome to see another team really out there grinding with the sole focus of adding value to the Leo ecosystem. So between that and the core team building LeoDex, I am feeling very good about where the future is headed. Obviously, none of this has been financial advice. Do whatever you want, but I am a huge fan of everything that's going on in our ecosystem. Thanks for watching this, and I'll see you soon.